Okay, let's begin the day by taking it straight to individual stocks that you need to watch out for. Rima joins in first up to tell us why IT stocks should be on your radar. Rima, how did the Accenture numbers look?
Well, Accenture reported the Q1 FY24 numbers and they were largely in line. No big positive surprises, no big negative surprises. The company's Q1 revenue growth has come in at 1% on a year-on-year basis, in line with the company's guidance. Now, what's relevant for Indian IT? One, the outsourcing pace for Accenture, which has gone up by 6.4% year-on-year, and deal wins have picked up by 21%. But what's also fairly heartening is consulting. Now, while Indian IT does not have direct exposure to consulting, consulting demand is a indirect indicator of discretionary spend. And consulting was contracting for Accenture for 3 consecutive quarters, given the tight economy. And this quarter, consulting revenues for Accenture have been flat. Though the management does say that generally discretionary demand and spending is going to be fairly muted in FY24, but we'll watch out for, is this a bit of a silver lining where consulting has reported. Full year revenue forecast has been maintained at 2 to 5%. Though remember, it's the inorganic component of this is going to be fairly large at more than 2%. Another interesting point to note is generative AI this time has contributed 2.7% of its overall revenues at $450 million of sales. So this is clearly soon, very fast becoming a growth driver for IT companies. And we'll watch for more clarity when Indian IT companies report their numbers. Back to you.
Okay, all right, Rima, thanks very much for that. So that is the Nifty IT index, which was lower in yesterday's trading session. But Mangalam, a lot of action in the FMCG space. Varun Beverages.
A lot of action. In fact, Ravikant Jaipuria, who's the promoter of both Devyani and Varun Beverages, is on an acquisition spree. Yesterday was Thailand and today is South Africa. I wonder what his flight miles would look like, But, as far as the news is concerned, Varun Beverages has gone ahead and acquired the beverage company in South Africa for around 1,320 odd crores. Beverage company has basically the franchise rights for Pepsi in South Africa, Lesotho and Eswatini. Also has the distribution rights for Namibia and Botswana. What does this acquired company have in terms of revenue? Close to around 1,600 odd crores. So to the overall volumes of Varun Beverages, this acquisition adds 15%, adds about 12% to their revenue and 7 to 8% of the EBITDA. Why is it that with 15% volumes, the EBITDA and revenue addition is lower? Because 85% of the volumes generated by the beverage company are generated by their own brands and not Pepsi's brands. And that's where the positive triggers for Varun Beverages comes in. One of them is that South Africa's per capita consumption of carbonated soft drinks is 240 bottles per year, much lower than India. So that's a big growth propensity there. And in this market, Pepsi has low single-digit market share. Varun Beverages can grow that. Higher shares of volume coming in from Pepsi could aid their business even further. And finally, 15% of their volumes are generated by their own energy drink brand called Reboost. That's a big opportunity for Sting. In India, Sting has been their fastest growing product in the last 3 years. If they can replicate that in South Africa, it'd be a big positive.
Okay, well, I was reading a report from one of the publications which said that household penetration of cold beverages in India has risen from 38% in 2019 and now almost at 50%.
Yep.
That's a big rise in household penetration of cold beverages. So I guess Varun Beverages is one of the big companies to benefit from that. But Nimesh is joining in. He's tracking Nippon, India AMC and the Embassy REIT. Nimesh, over to you.
Hi, Sona. There's a mad rush going on for promoters and Ps to exit thanks to the domestic liquidity. The biggest block today would be Embassy REITs. 23.5% stake is getting sold by Blackstone and they're going to raise more than $800 million by today's block deal. The indicative price is around 310, which suggests a 7% discount to yesterday's closing price. So expect a downtick on Embassy REITs to start with because there is a large block and at a discount as well. The second name is Nippon India AMC. It was part of my charter list as well a few days back. Strategic investor, which is IndusInd Bank, they're going to sell their entire 2.8% stake. So it's a clean out trade in Nippon AMC. Most likely the deal might happen in the block window. In that case, you might see a bit of a green take on Nippon, but a large block is on Embassy REITs today.
Okay, all right, Nimesh, thanks very much for that. So a lot of fund action and we're not over yet. JK Tyre and UPL.
Yes, in fact, JK Tyres has launched a 500 crore QIP and the stock is in focus. I'm going with green over there. It's set 358.9 as the floor price. But the important bit is this, JK Tyres is now looking to expand its tyre manufacturing capacity, and that's because demand has picked up in a big way. They are looking to make an investment of 1,025 crores to expand their capacity, and they're looking to fund it via either the equity or internal accruals or through debt. So they're looking at various funding options. But the important point is this, the stock has doubled in the last 6 months. 6 months ago, the stock was 188. Today, it's almost 400. So the street has perhaps priced in a lot of the demand up move as well, and the fact that crude prices have fallen. But yes, expanding their tyre manufacturing capacity is the positive, so I'm going with green. UPL is also going to have a board meeting on the 22nd of December. They're going to be considering fundraising as well. So that's another stock that we're looking at this morning. But Sudarshan is joining in. He has Astral on his plate today. Sudarshan, why are you looking at that?
Morning, Sonia. So one more company is joining the list of promoters using this bull run as an opportunity to raise fund or say dilute some stake. And I'm talking about pipe manufacturing company, that is Astral Limited. We understand from sources that promoter of the company is likely to dilute 2% stake to raise a little more than rupees 1,000 crore. As per the term sheet we have an access to, it indicates that floor price for the deal is seen at a 1% discount to current market price. And now if we talk about the shareholding, promoter of the company currently holds nearly 56% stake in the company, and it's been around the same level for the last 4 years. Last time promoter had sold any stake in the company was in September 2019. That time they had sold 2.4% stake at a price of rupees 962.48 per share. Since then, stock price has doubled and it's currently trading at rupees 1900 per share. In 2023, stock is up 30% so far.
All right, Sudarshan, thanks a lot for that. So that's about Astral promoters taking the advantage of a bull run. With that, let's move on to the NBFC space. Abhishek joins in with the latest on that one. Abhishek.
Well, some NBFCs could be under pressure today. RBI has come out and said that transaction of regulated entities, that is REs involving AIF, that is alternate investment funds, have raised regulatory concerns. So they have noticed transactions wherein, intending substitution of direct loan exposure to borrowers with indirect exposure via AIFs is actually seen. So regulated entities cannot invest in AIF or scheme where downstream investment is directly or indirectly in a debtor company. REs have 30 days to liquidate investment in any AIF that they have, and scheme, which makes downstream investment in a debtor company. Inability to, liquidate your AIF investment will lead to 100% provisions for these NBFCs or banks who have exposure to AIF. So if AIF have first charge over defaulting companies' assets, REs lending to these companies should provide additional capital against the loans. So RBI's new rules on AIF actually covers all aspect of lending institutions, banks, cooperative banks, NBFCs, etc. Jefferies has written a note. They say that the exposure to AIF of stocks under their coverage, Piramal Enterprise has 16% of net worth or about 7% of AUM, and IFL has about 11% of net worth or about 2% of AUM. So if REs have to make these provisions, the impact on net worth would be around 10% for Piramal Enterprise and about 8% for IFL. Back to you.
Okay, all right, Abhishek. Thanks very much for that. Well, let's now hop across to Vivek. He's looking at BPCL and Petronet LNG.
Well, good morning. The first stock that we're speaking about is BPCL. Some capex coming in from BPCL this time around. The company is looking to set up a polypropylene unit. This is at Kochi. The total cost of this particular project is over 5,040 crore, and the proposed capacity addition is 400 kilotons per annum of polypropylene. Now, the second stock on our radar, Petronet LNG. So now a subsidiary of Deepak Nitrite has gone ahead and approved execution of a binding term sheet with Petronet LNG. This particular approval is for offtake of 200 kilotons per annum of polypropylene as well as 11 kilotons per annum of hydrogen. So this particular offtake will be from the Dahej plant of Petronet LNG. So positive for both of these stocks.
All right, thanks a lot for that. Here's a quick recap of our top 10 stocks. Stocks with positive news flow. IT stocks, Varun Beverages, Nippon India AMC, JK Tyres, UPL, Astral, BPCL and Petronet LNG. While stocks with negative news flow, there's Embassy Office Parks REIT and NBFCs. But there are also a lot of brokerages that have come through this morning, interesting ones at that. So let's get straight to it. Sudarshan is here to tell us what to focus on for the day. Sudarshan, over to you.
In the brokerage corner today, we have three stocks. First one is CLSA and Ashok Leyland. It has buy rating with a target of rupees 238 per share. It says commercial vehicle upcycle to continue as indicated by strong freight rates. CLSA is building in 6%, 10% year-on-year growth in heavy truck volumes for Ashok Leyland for the next 2 years. Next one is MS on Manappuram Finance. It has an overweight call with a target of rupees 210 per share. It says it likes companies intend to protect 20% return on equity with 20% sustainable loan growth. And in the gold loans, companies targeting 8% growth with 21 to 22% yield. Last one is Macquarie on delivery. It has an outperform call with a target of rupees 520 per share. It says companies poised for better growth in H2 FY24 and company maintains its view of 15% plus gross merchandise value growth for overall e-commerce segment.
Okay, all right, Sudarshan, thanks very much for that. So that's a clutch of brokerage calls to watch out for this morning. But let's go across to Manisha Gupta, commodities editor. She joins in for a roundup of all the action from the commodity market overnight. Manisha, morning.
Morning, and thank you for that. Well, I'll talk about the crude oil prices first because we just about are inches away from that $80 per barrel mark yet again for the Brent prices. Almost did that in the New York session yesterday, and today is the third straight day of gains coming in for the crude oil prices. We are trading at a 2-week highs right now. Well, what's happening in Red Sea on commercial tankers in sense of Houthi attacks via missiles and drones is something that has been keeping the prices higher. And then there is output concerns also coming in from Russia, and the OPEC output cut is what the street is now looking at. The U.S. inventories in the meanwhile is something that the street will watch out for, and the further direction would come in from that. But it clearly is the metal space that seems to be buzzing. This is going to be a second straight week of strong gains coming in for this. Are concerns of mine closures, disruptions, not just in Canada, but also in Peru and Chile, and that has been keeping many of these metals in good favor. So copper is trading at a 19-week highs, aluminum at a 2-week highs, and if you look at the money managers, the new marginally not net long positions is what we are seeing in case of copper, aluminum, even steel. So these three metals clearly seem to be doing better.
All right, Manisha, thanks a lot for that. So that's about the commodities arena this morning. Let's take a short break, come back. On the other side, we have Prakash Diwan joining in with some fundamental stock analysis. Also, we'll be joined by Pankaj Poddar, who's the Group CEO at Cosmo First, to discuss their business outlook.